Welcome to the July 2024 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. Global GDP growth for 2024 has been maintained at 3.0% by Oxford Economics, reflecting steady growth in the first half of the year despite downside risks. On a regional level, GDP growth is expected to be 2.3% in the US, 0.8% in the euro area, and 4.8% in China. Looking ahead to 2025, global economic growth is expected to accelerate slightly, with a forecasted global GDP growth of 3.3%. Additionally, global inflation is anticipated to continue its downward trend, reaching an annual average of 4.5% in 2024 and 3.4% in 2025. In June 2024, gas consumption in the EU recorded a year-on-year decrease of 3.4%, which was mainly driven by the continuous implementation of the gas demand reduction measures and high hydro, nuclear, solar and wind output in the power generation sector. In the industrial sector, gas consumption showed a recovery in major industrialized European countries, boosted by the fall in gas prices. In the power generation sector, gas consumption experienced a 22% YoY decline, while total electricity production rose by 4% YoY, reaching 190 terawatt-hours driven by stronger cooling demand. This significant decrease in gas consumption within the power sector can be attributed to increased outputs from renewables and nuclear. In June 2024, US gas consumption increased by 5.8% year-on-year to reach 70 BCM. This growth was led by the power generation sector, driven by a surge in cooling demand after a warmer-than-normal month for large parts of the US. Similarly, the residential and commercial sectors recorded a growth in gas consumption of 43% and 14% year-on-year, respectively. Meanwhile, the industrial sector experienced a decrease of 0.4% year-on-year in gas consumption. Power generation from gas saw an 8.5% year-on-year increase, whereas the overall electricity production rose by 16%. In May 2024, China's apparent gas demand, which encompasses domestic production, pipeline gas and LNG imports, rose by 6.7% year-on-year to reach 36 BCM, driven by a recovery in economic activities and lower LNG prices. Electricity production from gas decreased by 5% year-on-year, while the total electricity production rose by 6% to reach 767 terawatt-hours driven by an increase in cooling demand in the south. Coal remained the dominant fuel in the power mix with 55% of the total share. In May 2024, Europe witnessed a strong rebound in its monthly gas production, which experienced a 7% year-on-year rise, resulting in a total output of 14.9 BCM. This increase primarily originated from the significant rise in the Norwegian gas production, overcoming continuous decline in the UK and the Netherlands output. In June 2024, US total gas production witnessed a 3% year-on-year decline to reach a monthly output of 93 BCM, mainly driven by the announced cuts in gas production by some major producers amidst low Henry Hub gas prices. Additionally, in May 2024, the total number of drilled but uncompleted wells in the 7 major regions amounted to 5,495, marking a 9 consecutive monthly decreases. With the current low Henry Hub prices, the private producers are expected to slow down their drilling activity, aiming to reduce cost burden, and therefore relying on their inventory of drilled but uncompleted wells. In May 2024, China's gas production reached 20.3 BCM, representing a 7% year-on-year rise. For the period January to May 2024, the cumulative Chinese gas production totaled 103.5 BCM, with a remarkable 5.4% year-on-year increase. In terms of new discoveries, in May 2024, approximately 400 million barrels of oil equivalent of hydrocarbon volumes were discovered, with gas amounting to 45 BCM. With this slow start, cumulative discovered volumes in the period January to May 2024 amounted to 2.2 billion barrels of oil equivalent. The Tungkalo ultra-deepwater gas discovery, located in the South Andaman area, offshore Indonesia, was the most significant gas discovery announced in May 2024, with estimated recoverable gas resources of 33 BCM. The EU reduced the volume of PNG imports from each of its gas suppliers in June 2024, compared with the previous month. As a result, the total PNG imports for the month reached 13 BCM, which was 4% lower month-on-month, but was still 15% higher than the level of 1 year ago. Over the first half of 2024, total PNG imports to the EU reached 80 BCM, which is an increase of 6% compared with the same period in 2023. During this period, the region imported 24% more PNG supply from Russia, followed by Norway with a 3% increase year-on-year. In June 2024, Norwegian supply to the Netherlands increased by 31% month-on-month, while flows from Russia to Central Europe and from Algeria to Spain were relatively unchanged from the previous month. China continued to increase its gas imports and set a new record for monthly PNG imports in May 2024. There was 6.5 BCM of PNG imported, which was 17% higher month-on-month and 13% higher than 1 year ago. In June 2024, global LNG imports fell for the second month in a row, decreasing by 0.8% year-on-year to 32.2 million tons, the lowest since October 2023. Europe and the LAC region drove the decline, countering increases in the Asia-Pacific and MENA regions. Europe's drop resulted from weaker gas consumption, high storage levels, increased pipeline imports, and a wider price gap between Asia-Pacific and European LNG prices. Meanwhile, the Asia-Pacific saw higher LNG imports due to stronger gas demand, particularly in electricity generation and LNG replenishment. Furthermore, global LNG exports rose by 3.9% year-on-year to 33.1 million tons, the largest increase since January 2024, primarily driven by Brunei, Indonesia, Malaysia, Mozambique, Oman, Russia, and the US. Gas storage levels, while already elevated, continue to grow. In June 2024, the average daily volume of gas in storage in the EU increased to 76 BCM or 73% filled capacity. There was 7.8 BCM of net gas injections during the month. Moreover, there was 0.6 BCM more gas in storage than 1 year ago, but 12 BCM more gas in storage than the 5-year average for the month. In Asia-Pacific, the combined volume of LNG in storage in Japan and South Korea increased by 6% month-on-month, to reach an estimated 15 BCM in June 2024. In the US, gas storage levels continue to be higher than the 5-year range. By June 2024, the average daily volume of gas in storage rose further, to 87 BCM. This volume was 10 BCM higher year-on-year and represents 65% of capacity. Gas and LNG spot prices in Europe and Asia continue to climb, driven by supply concerns due to outages and extended maintenance activities at several facilities, as well as increased demand for cooling. The average TTF spot price rose to $10.81 per MMBTU, reflecting a 7% month-on-month increase. Similarly, the average Northeast Asia spot LNG price saw a sharp 15% month-on-month increase to $12.41 per MMBTU. Additionally, in the US, Henry Hub prices reached a 5-month high, averaging $2.53 per MMBTU. Looking ahead, spot prices are likely to be supported by higher than usual temperatures, leading to increased gas demand for cooling. Thank you for watching this short video presentation on the July 2024 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.